hello. What are we waiting for? Of course, the topic of cryptocurrency. And we're the tax people, okay? So we can't really give you investment advices and tell you to buy what, where to buy, how to buy, and follow who, Elon Musk or follow. But what I can tell you is about how to account that in your tax return. So this is what we are up to today. Cryptocurrency, digital currency, the one that just shows up as a number and in your cold hot wallet, whatever that is. And sure, you have the digital currency. That means you have a property. So let's get started. And this is Ying. My name is Ying. If this is your first time meeting me, please know me. Okay, our next slide is standard, and our attorney and or our insurance professional liability insurance company, and they want us to make sure that we put in a no responsibility disclaimer for anything everything we do. Isn't that funny? It's like, okay, where do you draw the line? But of course you listen to me and make sure you you agree with what I say and come for further service. We will take care of you. Okay, now cryptocurrency is considered property for federal income tax purposes. What does that mean? That means it's actually reportable. You have to report it. For the typical investors, like if you buy a house and you buy equipment, and you would report that on your fixed asset, right? So in this case, that's your asset, that's your property as well. So it need to be reported, and you can put them under asset. You can literally give a name as a cryptocurrency, or you can just group them as your cash. So this is where this is what IRS would like to see you do, is capital asset. And the cryptocurrency under 1040 form, if you have paid attention to it, folks, and they have this line, they have a line asking you, do you have cryptocurrency? Did you not remember seeing that? Let me show you where that is. And you need to answer that question. You either do yes or no, but you cannot leave it blank. Okay, so now look, I got that picture for you, and this is your 1040. Did you see that? Did you see the yes or no right here? You see that? And you have to answer that. At any time during 2020, from January to December, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currencies? They didn't even say Bitcoin because it is only one kind. Bitcoin is one kind of digital currency. So they were like, cover it all. Say virtual currency, okay? Don't get confused with virtual currency or virtual payments are different, right? So like when we go online using our credit card to pay, we also don't use real paper money. That's a virtual transaction. You can remotely deposit your check. You can virtually pay things through your credit card, debit card, and direct ACH from your bank account. Those are still our US dollars or the real currency. They're not virtual currency. As soon as you talk about virtual currency, you are thinking of the currency system. For example, our US dollar is packed with gold, right? So the gold price go and US dollar go up and down. So of course it's not as simple as a linear, just like the gold and the currency. No, you can tap in, the currency can tack onto a lot of things. From gold, it can transform to be a vehicle, can be different things. So those are also becoming part of collaterals, if you call it, for the currency. Otherwise, how do you determine the value? How do you know we're in inflation or deflation, right? But virtual currency don't have that backup. And at one time, maybe Elon Musk was trying to use Tesla as the backup for the virtual currency, but that didn't work, right? So, cryptocurrency is a currency. It is not the same as a virtual payment method that you use online. And the next thing I want you to kind of understand that today we want to talk about taxes, right? How the virtual currency, works on your tax form. So first of all, you need to fill up that when you file your 1040, you own virtual currency. That's what you need to report. And the tax on gain is the same as you pay the gain realized on sale of capital assets. So for example, you sell your house, okay? You had a capital gain. And even though the house, the residential home capital gain was exempted for 500,000 as a married couple in one shot, but you still report that. You report on your tax form with the sale of asset, then you selected exemptions. That's why you don't get taxed. But for virtual currency, just like your other stock, like you bought Microsoft stock and you bought it, you sold it, you had a gain or loss, and you report it on Schedule D. So that's the same place you're going to report. So you will realize the sale of capital asset need to be reported, just like stock, bond, house, right? I'm giving you that example. And cryptocurrency, and it has no established form that gets submitted to IRS. And folks, do you know that like whatever we do on the financial world, for example, I bought, say I bought a $10,000 stock, ABC company stock. I bought it and I sold it. And I sold half. Later on, I sold the other half. At the end of the year, I receive a 1099-B outlines everything I did on what day, how much, what is the base. So the financial institution, whether that's a TD Ameritrade or Robinhood and whoever they are, they send that document to IRS showing IRS that that's your transaction. On your tax return, you also report that, oh, I had these transactions. So IRS knows that you're honest because the system understand you reported what you have traded. But cryptocurrency trading doesn't have a form. It is not of the government didn't recognize that as a currency yet, and they didn't recognize that as a standard, or I wouldn't say didn't recognize because they don't know what yet to do with this virtual currency. But you do have increased value or decreased value on it. So it's almost like, if I am a drug dealer and I am trading drugs illegally. So of course, for the law enforcement, you will get caught or you didn't get caught yet. But for tax purposes, it doesn't matter you're a drug dealer or not. When you made money, the right thing to do is to report taxes. Does that make sense? So we're talking from that angle by saying that even cryptocurrency wasn't recognized legally, and it didn't have backing to it. It's just trading out of whatever it is. And so then I should not really have any gain loss. That's not true because you probably did make money by buying and selling. But if you did that, there is no form to give you so you can file and you need to track that on your own. So you might not get a Form 1099 reporting the transactions for in cryptocurrency you have done during the year, but you still need to report the gain and loss on your tax return, right? So that's why I'm using extreme example of drug dealers, right? And of course, in the past, marijuana drug dealers are illegals, and so they should report gain and loss too. Now it legalized in many states, so that's no longer a illegal activity. But to report gain and loss never changed. It still always be that way. Okay, this is where, like in the drug war, the if FBI could not arrest the criminals, actually IRS steps in. IRS has this tool which you made money, you're supposed to pay taxes. If you don't pay taxes, you're in jail. That's how it works, right? So even though we don't get 1099, but if I trade cryptocurrencies and you want to track that and to report that, and cryptocurrency gain and loss. One sale, let's say you open up a wallet, you bought $5 cryptocurrency, then you sold it for $10. So your basis is 5, you sold for 10, then you have $5 capital gain. okay? And when you sell if your basis is 10, just like when the cryptocurrency dropped after Elon Musk says that Tesla doesn't back it up anymore, and it's keep on dropping, and then you probably bought it at high time, and now you lose money. If you sell that at the lost price, at the lower time, you would have capital loss. Hey, then you can deduct that out of your tax return. All right. Then let's see. So short-term, long-term capital gain. So short-term is holding period is 1 year or less. Okay, taxed as a regular income at your current tax bracket. So I'll give you an example later. For long-term, its holding period is more than 1 year, and it will be taxed at the 0, 15, 20%, depends on your income level. So let's see an example. So the short-term gain example is, John has W-2 income of 70K, and the short-term capital gain of 10K from the Bitcoin transactions. So his current tax bracket is 22%. So he'll have to pay 10K at 22%. So $2,200 taxes that will need to be paid. We're talking about federal dollars, okay? I know the people who are listening to our webinars from different states, some states don't even have a state tax return, state tax rate. Some states do, and the rate are different. So you want to think of the same. So that 10K times 22%, it is simply the federal rate. So let's look at a long term. So if John has a long-term capital gain for 10K on Bitcoin, because he got that, Bitcoin from other friends and never believed it will earn anything, suddenly discovered, oh my, in my wallet, it actually worth a lot more, I'm selling it. So he sold it, he got a gain. And if that's over a year, that's a long term, right? So that he will pay 15% because he is in tax bracket of 22. That goes for long term is lower than that. So the bracket he fall under is 15%. So there you go. If you have a long-term gain, that is immediately 7% saving. Am I right? Because we were doing 22% in the other example. So now tips for you. Okay, hold on to your cryptocurrency for long term. And especially if you're speculating it will go up. I really can't tell you what I speculate. Trust me, I don't know what I speculate because I don't have it. But I do have many clients have cryptocurrency. So I would say that from tax standpoint, it is better to be a long-term gain rather than short-term gain, because the long-term has this limitation for how much they're going to tax you. But in terms of your income tax rate, that could go up 37.5%. So not cool if you have it short term. Solid in the low income year means if you have, if for whatever reason you are getting less income in the year, but your cryptocurrency is something you want to get rid of, but you just don't want to sell it because it's too much gain, then this is a good opportunity because you will have it even lower, maybe 0%, right? So consider that and make sure that you plan. And then there is a question for me, and I want to, this is one of the questions we got from our clients while we were preparing for our webinar today. And I have to give the credit to Jolene in my firm. She's amazing. And I think what I will do is I will start telling people the heroes behind these webinars, who they are, because sometimes Catherine does that for me, sometimes Jolene, sometimes Dr. Howe. So all of these are, they're really, so, I'm just here telling you our research result. And on top of my own knowledge, it came out to you as if I know a million things, which is not true. But at least I can deliver that to you in a understandable fashion. And we do have this research team in the back and to support our content online. And so the question is, do I have income if I provide someone with a service and that person pays me with virtual currency? The answer is yes, you do have income. And you will need to recognize that income. Okay, this is how it works. So let's say I got you to draw a picture for me, and you charged me $3,000. Then I took my wallet and give $3,000 worth of Bitcoin to your wallet. Okay, so you got that. So on your tax return, you're going to report the $3,000 as your income from the service. So you will pay taxes for that as normal. But that $3,000 in your wallet, and later on you sell it for $3,000. So you zeroed it out. So when you sell it, do you have a capital gain or capital loss? Because you had it at $3,000, because that's how I paid you for the service. So your wallet, you have 3,000. And then if you sold it for 3,000 later on, that just means zero. You don't have capital gain, you don't have capital loss, and you simply take the $3,000 home as if you never ever turned it into Bitcoin. But let's say you sold it for 6,000. Let's say you sold it for 10,000. Then you have $7,000 capital gain. You see, I didn't say you have a $10,000 capital gain, because that 3,000 you got from the service is already paid taxes on that year when you got paid. So the answer is yes. If someone pay you anything to exchange service, it is your income, folks. So, IRS may come around and audit you for that year and said, well, you reported $100,000 income, but we only see $70,000 deposit in your bank. Do you know where's the other $3,000 income you put in? Then you go, oh, I forgot. I have a crypto currency wallet. I forgot to tell you, and it's in there. And you know that is in violation of tax reporting, because you have supposedly already disclosed to IRS that you have that account. IRS want to know that account from you. You know why? Because they want to know how you put the money in there, whether your basis is there before you say you have a base. Okay, so that is one question we frequently get. The other question we have here is, does virtual currency received by an independent contractor for performing services constitute self-employment income? Such a smart question, because when people say self-employment income, what does that mean? That means your income not only subject to income taxes, also subject to self-employment tax. And how much is that? 15%. So same example, that's 3,000. So that 3,000, I paid you. You draw the picture for me, so I paid you. But I paid you into your wallet for Bitcoin. And so you will report 3,000 on your Schedule C, saying that, oh yeah, I did make $3,000. I have no expenses because it was only a pen and a paper. No expense. I just drew that for Ying, and that's what she paid me. So that $3,000 will pay for income tax. Say that's 10%. So you will pay $300 on income tax. Then you will also pay 15% on self-employment tax. That's $450. So that is this question means. So even though you paid me cryptocurrency and I didn't even take it home, it was in somewhere online. It's called hot wallet. It doesn't matter. So you're going to pay income tax and self-employment tax. Great question. Great question. And people are really thinking. So next, will I recognize a gain or loss if I pay someone with virtual currency for providing me with a service? The answer is yes. If you pay for service using virtual currency that you hold as capital asset, then you have exchanged capital asset for that service, and we'll have a capital gain and loss. Got it? So this is how accounting goes. So I have a virtual currency and sitting on my book. And so I basically use that to pay for the service. So what is the current value for the service I need to pay. So the service we're asking for 10,000. But if I sell my virtual currency, I can get 10,000 to pay that. So I'm just giving this currency to the person, tell the person that, look, it is $10,000, here you go. So what happened on your accounting is that you're selling 5,000 base minus 10,000. So that is a 5,000 capital gain, okay? And then you will use your, you basically exchange your whole 5,000 capital asset plus the $5,000 gain, and you exchange for the service. So that would be your expense. So you will book 10,000 as expense, and because you paid it, right? But you will recognize your gain with $5,000 gain. So this is where, and you convert your 5,000 virtual currency into cash position. So that become a 10,000 cash position on the balance sheet, basically, right? So you can, you actually, for that basis, you convert that into cash, and for the gain, and instead of booking them as a regular gain, you book them as a capital gain. So both of them, your cash position plus your gain paid for the service, you paid 10,000, so you book an expense entry for 10,000 of that service. Perfect accounting, okay? I know it may be a little bit messy, and you don't have to do that today. But if you do have that transaction, the best idea is to go to your accountant and come to Community CPA, and we can map it out for you. And we're so good at mapping things. You know, when I was kid, I like to draw, so that really serves me. So drawing helps understanding, just like Chinglish helps understanding as well. All right, our last question. When I donate virtual currency to a charitable organization, how do I report that on my tax return? Hey, the answer is non-cash donation. See, it's not cash donation, it's non-cash donation. So make sure that you actually know what that means on Schedule A. There is a separate section for non-cash donation. And then if it is a company asset and you're donating out, then that obviously donating the capital asset. So how did you donate a machine? So you donated machine by getting out of the book and donating the book value, right? So you will donate that as well. So it should not create any gain and loss. Unless you're gonna cash it out, then donate cash. So that would be different. All right, so this concludes our cryptocurrency talk. And make sure, and this is Catherine's email, if you have any interesting topic you would like Ying to talk about, and send email to Catherine and she'll take care of you. And of course, this is our phone number, and we are actually open 6 days a week regularly. We have 2 shifts in our firm, so we work one shift work Monday to Friday, the other one Tuesday to Saturday, but to you, we open 6 days a week. So I will talk to you, and it was so good to see you online, and I appreciate it. You are following us. Bye-bye.